What is going on, everybody? And in this video, we are giving the state of the market, some key levels to be watching, and some top picks that I feel you should be watching on this particular pullback. Or is it a correction? I guess we'll find out. So if you haven't done so already, consider subscribing if you are looking for stock market analysis with technicals and fundamentals. Being said, let's get to that state of the market. So it is quite obvious the market has seen a lot of red. We have gotten a lot of red flags up to this point. We have been very parabolic. Obviously, since we've had all this money injected since last, it's actually been almost 2 years now since the pandemic, we have gone straight up. We haven't really back tested a lot of different levels, which is concerning. But also being said, the market has to continue to go up for our economy essentially to stay afloat. So different rules, procedures, and all that jazz gets put into place so that we can continue to go higher and make all-time highs. Being said, currently, if I would have had to guess, what is going on is the market is going to make a correction based off of first rate raises. Now, with this, it's not quite a correction yet. It officially has to be 10% to correct. Now, there's a lot of stocks that have done more than 10% correction, but you have to understand with the rate raises, a lot of things in inflation, things are going to normalize. Normalization is going to bring all these inflated numbers, essentially realizing that a lot of these stocks have huge market caps for future potential that they won't see possibly 5 to 10 years down the road, hoping that everything does play out well. So we get normalization, and that's what we're seeing. We're seeing correction. Again, people are trying to price in a rate raise even when that rate raise comes. I think this is kind of helping alleviate that. So when we actually do get a rate raise, it won't be so bad. Because if we were continuing to push up and we had a rate raise, especially if it was an emergency rate raise, which I think is why we're getting a correction now, because if there so happens to be an emergency rate raise, which I think is very much possible and going to happen this year. I think we're just going to get it out of the blue. We're going to get a rate raise when the Fed essentially feels that it is going to happen. Next week, we get the Fed. Honestly, I don't think it's going to matter. I don't think we're going to get anything new, no new time frame, new exact rates. None of that's going to come out. That, again, I think will be an emergency rate raise, considering what is possible. But everything else being said, the pandemic stuff is essentially kind of coming to an end. There's nothing really constraining the market at that point, unless, again, something we've talked about, if China decides to lock down, affecting the supply chain, then it's going to be an issue. Aside from that, I don't really see it really doing anything aside from that. So being said, our biggest concern this year is rate raises. We're going to get 4. I highly doubt we'll get more than 2. That first one, I think, will be a very blindsided rate raise. Again, we're not going to really hear much. We're only going to hear about talks in these meetings. Again, I think it's going to be very blindsided when it does happen. So the market, again, took it upon themselves to just start correcting. That's why we've been making these all-time highs for less than a couple hours, and then we just sell off all-time highs, and sell off all-time highs, sell off. So this time we didn't quite do that. We made a higher low, not good, a lower low. Obviously, we're starting to come down. And if you look at the SPX in itself, we are sitting at roughly about a 6% today from all-time highs. So we are about 4% away from an official correction to start out the new year. So 2022 for stock market purposes is starting out fantastic. What the good thing is that it will lead to good positioning to some of the best stocks that some people may not have had a chance, especially during the pandemic when we had that market correction and everything essentially dropped about 50-60%. You're starting to see that right now. I think it will get you in good position for later on this year. So if you're looking to invest, I think giving another week or two would be a good time to start investing, especially if you're new. Again, this rate raise and stuff, even when that rate raise gets announced, I think we're coming closer to the bottom. We still 4%. It would still be an official correction. It could still go further, but again, once you start getting into that official 10%, in my mind, you're going to hit a reversal pretty much at any point of that time. I don't think we have a big enough reason to keep selling after a correction. The market needed a correction, an official correction on the index, and I think we're starting to get to that point. Obviously, we hit a solid support here at 45.37. We have not bounced, and this is something that's you can tell the market is extremely weak. This is pretty much the only bounce we had last week, and then this week we went flat and continued to sell. We have to see that we got the 20 EMA weekly support, so we're going to get at least another pushback up to this 45.82. In my mind, that is going to be good for a perfect short and a good strategy if you are a trader, is to be able to play both sides and play both sides well. So being said, that I'm looking for a bump at some point this week. Maybe earnings will push us back up to that. And then again, I think we're going to get an official correction. I thought it would have been in March. I think everybody was anticipating March. I think even the Fed, they came out last month and talked about stuff about raising rates, and people just started assuming that it would be in March because that's normally around correction time anyway. But that all got pushed up because the Fed is uncertain. So that, again, market just took it upon themselves, say, okay, well, we'll just correct. Then when you decide to do an emergency rate raise, whatever the case is, you're going to announce it, whatever the case. We already have that priced in, so we can start building towards 2022 where people are start making whatever percentage it is for the institutions that they are essentially needed to make for their clients. So being said, SPX, again, plenty of room. We have this level here. 45, 50. I think we get a good bounce off of here actually tomorrow. It could be a strong possibility to see that run back up and retest the 45, 83, 84 mark. From that point, we could come down the 4,500 mark. I think would be a solid number. Again, if this is the concerning part, is if we start getting big rate raises, that's going to be a concern, and it's going to really drop the market more at that point. But again, we won't know. Powell is he is not going to go out there and state, okay, during this time frame, this is when it's going to happen. It's going to be this exact percentage. It's going to be very, again, much blindsided as what's going to happen. He's starting to see stuff. Again, he doesn't use transitory, but he still believes that it's transitory. Again, things are starting to clear up. So they're trying to soak up some of that money. We'll see what happens on that end. But I don't know. There's still very much uncertainty going on in the market. And then the market's not going to want to turn around and have too many rate raises, because that can be an issue as well moving forward. So again, big levels to watch are those. Ultimately, I think we do come down to essentially the 4,500 mark. At that point, we'll get a really solid bounce off of that. Maybe waiting for before we might continue to sell till we hit that, and then turn around and go for the 45.83 mark. But if we do break that, the 200 is way down here around the 4,400 mark. Could be a possibility, right? I think with what's been going on in the massive amount of pushing that we've had, I think that would be a good turning point for this market and what's going on. Again, pushing back up, it's going to be a battle as far as any kind of positive catalyst at that point. I think there's too much negative catalyst in the chambers for us to start pushing back up. Again, once the rate raises come around, once that first one hits and sinks in, I think from that point we'll start correcting, pushing back up nicely, and start again. There's still tons of money in the system. We're still going to continue to push, but you're going to deal with this until we get a rate raise. We're going to play this volatility game. So as far as Bitcoin's still, like I said, I'm still bullish. Bitcoin is still holding 41K mark. Again, I think it can still come down around that 33K mark and still be bullish. We'll see what happens. Again, I think there's too much positivity going on with crypto, and there's a massive amount of acceptance in crypto, and the NFT space is just massively being adopted, and people loving the space. I think that the crypto is here to stay. Where that new base is, we'll have to determine that, and I'm sure we'll find that this year. If we do bounce from here, or we go a little bit lower to the 32 and the reverse after the rate raise and start pushing, where will our new base be? I don't believe it's going to be at a 10K mark. I believe maybe that 30K mark might be the new base. It has bounced off it before here, so we want to see where we continue up. Again, same thing with the market, which is actually funny, is as soon as Bitcoin almost hit that all-time high, sell off, all-time high, sell off, all-time high, sell off. Again, all-time high, sell off, all-time high, sell off. So it's not holding it very long. People don't want to be playing with all-time highs in price discovery when they know a rate raise is coming and they know it's going to happen this year. So we'll correct, and then we'll go for all-time highs again, get it more in price discovery so we can push more. But first, we need that rate raise. We need to get it in. We need to know what it is. Once we get that first one and get that percentage, then we can kind of gauge what the other percentages and time frame and all that stuff comes on later on. But that first one is really going to be more impactful. So Tesla, again, big one watching, is going to have a huge earnings. Tesla, a big one to watch. It's going to have a huge earnings. And we've seen delivery numbers when one of the biggest proven companies is selling, going right into earnings, the market's bad. Being said, we are at a pretty strong level here tomorrow, especially around that 1K mark. We've had a bounce out of here before. We retested it today. I wouldn't be surprised if we get a bounce back up to that 1040 mark tomorrow, maybe even Friday, and then we continue to sell off and going into next week, because we do have the FOMC could possibly even push us down to the 900. Get digestion of that meeting, and then get some more earnings, and then possibly start pushing back up. Going around that 900 will also raise this 200 EMA. It's another big level to watch, is that this will slowly push up as the market starts to come down day after day. So I'm pretty sure this will probably start lining up around that 900. I think 900 would be a solid base for Tesla moving forward. If it breaks below that, I think there's more of an issue there. But ultimately, Tesla's one to watch. Apple's another big one to watch. Key levels here, it broke the 168 mark. So I'm looking for a retest of that tomorrow or Friday, just like Tesla. I'm looking for some push in the next day or two. And then from that point, it's going to continue to sell off. And then another key point here is 157, another key level to watch. And then again, that 200 is floating around the 150 mark, another solid mark. I don't know if Apple will get down that low. I think earnings will push this back up beforehand. I think we would be lucky to get down to 158. Anything's possible, but especially since people are putting all their money into big, well-known names, and this is why I like playing big tech and NDMs and all that's been going on. They will get hit because people don't feel secure in those, especially with what's going on, the uncertainty and rate raises. People want something that's more secure. Let's see, Google. Google here is, I think, the biggest level to watch. You're going to get a break and a retest this 2,700, a good, nice round number. And then going into the 200 EMAs, you're looking around that 2633, 2634 mark for Google. Again, I think they got earnings coming around the corner, February, it looks like. So if that's the case, you're going to get, I think, another big rip after that. We're just trying to get through the FOMC meeting again, which I think we're not going to get any information, and then we'll probably do another turnaround and bounce once we get digestion of the meeting. Everything will have great earnings. I think everything will continue to sell off until they get digestion of the Fed, and then I think next Friday, I think we'll probably get a good turnaround point. I think leading up to that point, we'll probably continue to sell. Amazon's really at a low point. It'd be interesting. I don't think they're going to do very good on earnings either. So this is one I could possibly keep on your radar, but I definitely wouldn't keep it high. Key levels, I mean, you got a monthly sitting here at 3,100, which is almost hitting. It bounced out of here nicely already. But it is the second attempt. I like to get first bounces, but second attempts is normally when it's going to break. So be mindful of that. Facebook, again, still rebranding Meta. I think you're going to get this wicked chop until it figures out what's going on. I think Shop could do well. Again, they killed Black Friday sales. They tried to bounce out of this strong zone, this 1060 zone, but and it did pretty well. We got a pretty nice bounce today, and then just straight butter through it. So I have to see. Airbnb is another big one I want to watch. I think the biggest key level here is the 131 mark. If we get that low, it's already holding this 154 mark really well. But if it does break that, it's definitely coming down and coming down fast. And then we have Microsoft. Again, big key levels is that 295 mark. I think it could hold there going into earnings next week. If it does, we're going to get we could get a nice push back up to the 320 mark and then possibly break that. So it started pushing nicely today. I had that nice bounce off the 305 mark, but again, the market is going to get this price in for the rate raise before it really starts moving higher. It is trying to guarantee itself that rate raise is going to be in there before anything else happens. So just be mindful of that. Now, if you've made it this far, this video's already been really long. I don't want to make this too much longer, but there's a lot going forward. Just be patient with it. Play both sides and realize there's probably still another 4%, if not more, coming going into next week. Right now, I'm shorting the pumps, buying the dips, and playing intraday mostly. I think overnight, if we get a big enough sell or big enough push, I think you could play the other way. Again, you really have to manage risk in this market because it's going to be extremely volatile until we hear something from the Fed. So if you made this far, throw down a thumbs up and subscribe. Until next time, I'll see you guys later.